Hello and welcome. As the world is bracing for reciprocal tariffs from the US and the uncertainty on Donald Trump's tariff stance remains, what really does this mean for markets and for gold prices? Now, we have seen the markets tumble. We've seen the Nifty and the Sensex tumble over 1.5% in trade today. We have seen gold prices continuously hit a record high. So, what really does this mean for equities and other asset classes? Well, to decode this, of course, I'm joined by Ajay Bagga, senior market expert. I'm also joined by Kunal Shah, head of commodities research at Nirmal Bang. Thank you so much, for your time and, of course, for deciding to share what this uncertainty really feels like as far as the markets are concerned. So, Ajay Bagga, markets clearly don't like uncertainty, and we can see the market meltdown very clearly.
Yeah, and one surprising thing I'm seeing today that the rest of Asia is up, even Europe is up slightly because the damage happened there yesterday. But we were shut, our markets were shut yesterday for the Eid holiday. So we are seeing the follow-on selling happening today. So hopefully we are near to that selling because the rest of Asia today is green. And even Europe has opened in the green. Yeah, last night, the US markets were down for most of the trading session, and then in the last 1 hour, they recovered to open to close slightly in the green. Nasdaq was still down, but S&P 500 and Dow close in the green. So the big question is uncertainty. Yes, tariffs. How widespread? How deep? And for how long? I think these are the questions which nobody has an answer because the perpetrators of that tariff also don't know, I think. So everybody's trying to see how far can you push the other guy. Like 25% automobile tariffs are just not possible. The global automobile industry will just collapse. So even the US sales of automobiles, nearly 80 lakh cars are imported into the US every year. If you make them 25% more expensive, demand will just start crashing. The second thing is European factories having their European car makers having factories in the US are exporting 60% of that output to the rest of the world. If the world starts putting tariffs, then where will they go? So, right now, Sakshi, what we are seeing is a lot of uncertainty because we don't know the extent, the spread, and the time that these tariffs will take. And the objectives for the tariffs are impossible to reconcile. You want higher taxes, but if you bring in more tariffs, demand will go down. You will not gain those taxes. You want to shift manufacturing to the US. For that, you want a weaker dollar, but the dollar is getting stronger in an uncertain environment. So there are very, opposite kind of objectives right now at work.
Right, but Kunal Shah, gold prices clearly thriving on this uncertainty, the safe haven demand, and gold prices continuously hitting a record high. So, what does this really mean? What does the tariff uncertainty mean as far as gold prices are concerned?
Yeah, so gold prices have risen because of multiple factors, the ongoing geopolitical tensions across the world. That was one of the major reasons. Second, central bank buying from last 4 years. So in last decade, central bank used to buy 300 to 400 tons of gold versus in last 4 years, the average buying has been 1,000 tons. So central bank buying, de-dollarization, the possibility, the all the central banks shying away from US bonds and buying golds. This was second reason. Third reason was expectation of rate cuts across the world. So we've seen all the major central banks are cutting rates. So all these, and the fourth one, Mr. Donald Trump. After the Donald Trump has come, you've seen gold prices have risen by more than 18 to 20%. So the kind of uncertainty he has brought in on the front of tariff has led to a lot of people going towards the safety, and that's they have been buying gold. So we've seen gold ETFs holding in last 3 months have been rising, but the jewelry demand, the retail demand have suffered very badly in the same period. So I think this is the time, that gold has discounted all of the positive reasons. So all of these positive reasons, which was accounting for the major spike in gold prices, have been discounted. So I was expecting gold to test 3,050, $3,100 by the end of 2025. But in April only, they have tested 32, almost $3170 today, $3200. So I think gold has factored all the negative news, which was going to cause rally in gold futures. It's a time, I believe, it's a slightly contra view, but it's a time to take profits, because if the tariff front starts gets resolving, then you are going to see some profit taking. If the peace talks with Russia, Ukraine start materializing, that can cause profit taking in gold. So I think the time has come, where I would stick out my neck and say that it's the right time to book your profits. If you bought the gold as a trader at 60, 70, 80,000 rupees, and right now it is trading in 92,000 rupees, I will not recommend to buy gold at these levels. These are the levels where investors or traders should book a profit and wait for the correction, and then you can re-enter into long position. So it's the time to book profits.
All right, now Ajay Bagga, we have seen IT stocks significantly hit. Which sectors really are going to be impacted, and which stocks really are going to be impacted as far as, of course, the tariff implementation is concerned? Your thoughts?
Yeah, Sakshi, one is country level tariffs if they come in. And I don't think India will get an exclusion tomorrow. Tomorrow, he will announce tariffs on everybody. And then slowly India will get some kind of exclusion, some kind of rebates. So we have to see where all are we exporting. We have textiles, we have gems, jewelry, we have intermediate goods, consumer durables, electronics, and we have a very big pharma as well that we are importing into the US. So all these companies could be hit. Automobile parts and tires and stuff like that, we are sending $8 billion worth. Pharma is 8 billion. Again, EMS, which is electronic manufacturing, small electronic goods, we are sending a big portion. So all those will get hit in a country level. And then sectoral. Sectoral, we have seen steel and aluminium where we didn't have too much exposure. Smaller steel players had some exposure, but more listed players were able to absorb it. But like that, we have seen now automobile. There again, we didn't have finished products. We had automobile parts that we were sending. That comes on May 2nd. So still, we have a month more. Hopefully, some negotiation will happen. And third is tomorrow, if uh, pharma sector tariffs come. There we have an $8 billion. So we can easily absorb 10, 20%. I don't think it will come down to that, but it could be a global pharma that they put in, and then they say generic makers from India are exempt. So we'll have to wait and watch. But tomorrow there could be uh, uh, a very hackneyed response from the markets based on the headlines. So we will get to see on April 3rd morning. So today, tomorrow, Indian markets would really be hit by uncertainty on not knowing what is coming.
Right, of course, a lot really in wait and watch mode. But Kunal Shah, for those sitting at home and saying, okay, are gold prices going to slide further? Are they going to increase? Should we be buying gold? Should we refrain from gold altogether? Of course, we have heard, of course, the likes of Goldman Sachs also come out with their outlook and how they're saying that, look, recession risks have increased for the US and the Eurozone. So the inflation fears also helping boost gold demand altogether. Your thoughts on the near term and the long term impact on gold prices?
Okay, so first of all, regarding whatever we've seen in terms of US policymakers, whatever Fed has been going. So first, I would like to mention that all these tariff hoax, whatever is going on, is a way to deliberately slow down their economy, bring down their bond yields. More and more people should buy US bonds, and that's how they can roll over $7 trillion of debt, which is impending. Okay, so this is more to do with rollover of their debt rather than, so on a global scale, this is the best way they can roll over their debt. So if the bond yield comes down, 10-year benchmark comes down to 3.7 or 3.6%, their job is done, believe me. And after that, you are going to see a series of rate cuts being announced. So I think one should understand in this kind of scenario where there is a possibility that the dollar, US dollar, can go down quite sharply. That's been a base case scenario. That's why you should be owning gold. But the fact is, Gold is discounted all of those reasons is being discounted in $3,200 price. So I am not structurally bearish on gold, but I feel that this is the time that you take some profits on the table and wait for some correction, because now it's becoming a consensus trade. Everyone is coming up and saying gold $3,400, gold $3,500. Where were these people at $2,000 or to $2,400? Nobody was buying gold at that point of time. And suddenly now gold at $3,200, we are seeing reports that buy gold $3,400, $3,500. No, I don't think so. This is the time you should control your grade and you should try to take some profits. And Indians are very smart. So I've been talking to a lot of big dwellers and seeing what is happening in the actual market. And in reality, people are coming and selling their golds and they are not buying new gold. So people are smart. Indians are smart. Indian women are smarter than men. This is the best example of that. And this is the case in cities like Mumbai, in Gujarat, in cities like in North India also. This has been a trend which is going on from last 2 months. So I would follow women, what they have been doing. They've been buying gold. And now they are the one who are selling gold at this rate. And believe me, these are, I may sound quite aggressive, but the thing, this is the time to book profit. I have been long on gold from last 4 years, and now I feel that this is the time to take profits on table and diversify that profit or that amount to silver, because silver market is in deficit from last 4 years. So there is a big thumb rule in commodity. Shorted doesn't have a, you cannot predict price of commodity which is running in shortage. So the industrial demand and especially the demand from the clean energy sector in silver is growing at a double-digit growth rate. Okay, there has been the new silver supply is not coming in. Forget about Hindustan Zinc is a exceptional case, but most of the 50% of the silver comes from the secondary mine and 45% comes from the primary mine. There is no addition in both capacities, in neither in the primary on the global level and nor in the secondary production. So silver production is stagnant, demand is growing at an exponential rate. And remember, China is told that they are going to buy commodities in their strategic reserve. So I think there is a strong case for silver. If you buy right now, there is a possibility you can get a 20% return in a year's time. So buy silver and take some profit on gold and wait for correction, and then you re-enter at around $2,800. So not a technical
Okay.
analyst, but just give you a rough idea about the levels.
Okay, so that's a very interesting take. But last word to you, Mr. Bagga. For those saying, okay, so is volatility here to stay? We have seen immense global volatility, of course, on back of the tariff uncertainty and more. But with reciprocal tariffs now being in the spotlight, are we bracing for more volatility also at large?
Yeah, we are. And 2nd April will not be like your board exam is over and you throw away your books and wait for college. Oh, this will linger on. It will take 2, 3 months to get some semblance of clarity. And India will be negotiating hard for getting rebates. So tomorrow he might announce that this rate, but from June 1, in which case there will be a relief rally. But that is again a rally to sell into, because we have to be clear what is the final outlook. And there, I don't think there is clarity even in the US administration. So don't blame yourself if you're not understanding what is happening. Nobody in the world is understanding what is happening, because morning to evening, the most powerful person in the world is changing his views. In fact, Kunal, you would have read some of the biggest global commodity players, they want to change their trading room hours of working, because they want to be there in office when Trump is tweeting or writing on Social, because that is more market moving than any fundamentals right now. What he says, standing in front of Air Force One, and he says, no, no, I'm going to put tariffs on everybody. Or he says, beautiful tariffs, not so deep, but we will have some nice tariffs. And then the market moves one way. So he also understands, and tomorrow it's going to be reality TV. He is sitting in the Rose Garden in White House. You want to do it, have some bureaucrat come and say these are the tariffs, finished. But it's going to be a lot of reality TV, and on every sentence, markets will be moving. So in that scenario, don't blame yourself. Stay on the sidelines happily. Watch it as reality TV. Don't put your money into it.
I'd just like
Absolutely.
to add to it. I'd just like to add to what Bagaji said. It's a time has come for all the financial institutions to have a Donald Trump analyst, specially designated. The time has come because the way the tweets are coming, suddenly Russia becomes friend, suddenly Russia becomes another day Russia becomes enemy. You see oil prices move up by 4%. So, being a commodity research team, I have we were discussing that we need somebody who tracks Mr. Donald Trump's tweet all the time, and then we can have our view based on that. So yes, well, I completely agree with Bagaji. It's a time to have a Donald Trump tweet analyst right now in all the major financial institutions.
Okay, very, very interesting there. And of course, the spotlight on Donald Trump's tariff stance continues. And of course, how equities and gold and oil prices will react. Thank you both for sharing your thoughts.
Thank you.